is a presentation of TFNN. Live at TFNN, the Money Masters.
Let's go to Carlos in California. Hey, Carlos, what's going on?
I want to thank you guys for all that you do for TFNN. I've been a Tiger for over 10 years. Actually, started listening to you before I even speak a word of English.
Oh, really?
And the thing that captivated me was when you make like, rawr. I was like, wow, what is that?
That is so cool. And where are you from?
Take it serious. I'm from the south, actually the northwest part of Mexico.
I love it.
Right next to Guayabitos.
Okay.
It's close to Puerto Vallarta.
Okay, cool.
Yes, and I listen from there, and then when I arrived here, I married my wife, and then I keep listening to your radio station.
That's a beautiful thing, man.
That's a great thing.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Half of the Money Masters are here. Tom is still out of town. He will be back tomorrow. The team will be back tomorrow. The dynamic duo. Right now, you got the Dow off 11 points. S&P's off 1. Composite down 2. Russell down 1.5. NDX just turned negative. And what's that all about, folks? Well, it's all about that man right off to my shoulder there. It's all about King Dollar. The king is back, if you will. The king right now off 1 penny, and that is what is making these markets, giving the markets a little conniption, if you will. It's all about King Dollar, which means, it's also about the Queen Euro, the Queen Pound, the Great British Pound, the Yen. We'll go take a look at those currencies. Anything you want, you can always give me a call at 877-927-6648. And but first, let's go take a look at Radio Shack. Apparently, Radio Shack is not going to be selling as many parts as they want because that thing is down, not just down with a vengeance. Trading out right now at $7.26. The market's been open for 38 minutes. I didn't read the report on this, but trading down with 22 million shares. And, that is a stinger. So let's go ahead and put Radio Shack. First, let's go ahead and put it on a weekly. This is a daily chart that we're looking at here. Let's go see on a weekly chart what this thing might be going up against. That didn't look good. So what Radio Shack is doing, it's going up against the lows here, and it's got a weekly chart. It's going back all the way to March 2009. March 2009 got down to a low of $6.47. Looks like maybe, let's see here if that was the actual low in March. 655 actually was the low for the week of March 6th, 2009 when it put in its low. Now, what you're also looking at, you're looking at this weekly chart. And folks, how I talk about the importance of really understanding candles, if you will. You can see what gave you a nice signal as this came off the bottom was this bullish engulfing candle. Did that on a weekly basis. I provided all of my clients this week in Monday's newsletter with a list of all the bullish engulfings, bearish engulfings, hammers that were out there, just the candle patterns that it's really important to understand and know, where you're at, in order to understand where it is that you're going to be going. Well, right now, where Radio Shack is going is Radio Shack is going down into the lows from March. It's coming in there with some volume. If you take a look at the volume actually down there at that swing point, you only have 23 million shares. And what did I say today? It had already done about 12 million. So it's got volume coming. It's got volume coming down there. If we just take Radio Shack and go back a little bit further, so it's at its all-time lows as we take a look at this. So, you don't get in on Radio Shack. That thing is, apparently that's got some real problems out there, and no reason for me to even pull up the monthly chart. Again, if we just simply go back to the daily chart, you've got, as I say, you've got some significant volume coming out of the Shack, if you will, the Shack attack. Come on, there we go, cursor. So right now you've traded down 22 million shares. 22 million shares. Ooh, that is a stinger. What else can we take a look at that had earnings? Looks like we had Pfizer had earnings. Let's go ahead and see what Pfizer is doing. The ticker symbol on that is PFE. See how that is trading right now. Pfizer looks like it's trading out at 21.54. Doesn't look like much movement there. Looks like Pfizer just simply in nothing more here than this rectangular sideways trading range. So nothing big there. I believe Who else? Eli Lilly, LLY, the ticker symbol on that. Let's go see if there's been any movement in Eli Lilly, LLY. See how that is trading after its earnings release. Looks like that gapped up a bit and then sold off, trading down. And if we take a look at Eli Lilly, you can see it made its way up here, gapped down on the January 5th time frame. Right now, all that Eli Lilly is trying to do is to go up against that that gap area. Is that volume really? Let me just refresh this screen here. Well, there's not really much activity going on Eli Lilly, so let's not pay attention to that. You did have so we're right now pretty much along the flat line. You know, what I didn't do during the first shows was take a look at the ETFs. Let's go take a look at we'll punch up the ETFs on the shorter term, just simply on the 5-minute chart, 5-minute charts, if you will, just to see if there's any kind of volume that sticks out at us during the first 45 minutes of trading, if you will. And, stay tuned today, folks, because following this show, we've got Kate Stalter in the on-deck circle. She's going to do the small cap roundup for us. Then we have an hour, uninterrupted, commercial-free hour with the folks from TD Ameritrade, Think or Swim, if you will. And I'm not sure which of the great guys is doing the show this morning, but they'll be on. And so just a great lineup today. Ken Shreve will go ahead, did a great job yesterday filling in for Tom, and Ken will go ahead and take us from the 3 to 4 time frame, and then I'll be back with you from 4 to 6 today, filling in for Tom. So we can take a look at the Qs, just simply on the 5-minute chart here. You've got the Qs that closed out yesterday, and then we gapped up this morning. When we gapped up this morning, you gapped up with volume on the 5-minute chart, 1.5 million shares. You've come down, you closed that gap. The top of that gap was yesterday's bar. The high during that last 5 minutes of the trading session got up to $60.46. What did you do as you came down and you closed that gap? You got down to $60.43, closed out at $60.59 just during that, or $60.59 was high. They closed at $60.48. Closed at $60.48. And $60.46 was the high. Now, what you were doing, just simply on a 5-minute chart, you were coming down with 1.3 million shares. That was going into the area where you gapped up at 1.4 million shares. So not enough juice, if you will, to bust it down. And look at this here, folks. Let me just go ahead and blow this up for you because it's so cool to understand. This chart's still very small, right? And I just made it a little bit larger for you. What's really helpful to understand are your Fibonacci retracement and contraction numbers, because you can put that together with regard to swing points and what's happening there. What you can see here is, and it works on any chart time frame. I use the 5-minute charts during the morning shows, if you will, just simply because you've got some more swing points, you've got more retracements that are happening, and you just really are able to really see and get and understand the feel of how the market just simply breathes. It does it on a continuous basis, and so on the 5-minute chart, you can see the breathing pattern. We'll just simply do an exhale of 0.786, come down and test where it gapped out, close that gap, and now we'll watch to see, how it trades. And you can take a look at candles during the same process. Is this setting up an A to B equals C to D up in the Qs? Well, it's all going to depend on this guy right here, King Dollar. What does King Dollar want to do? And, we haven't looked at the currencies today. So let's go, flip over, take a look at the currencies. We can take a look at anything. You just got to give me a phone call here, 877-927-6648. Currency-wise, let's go take a look at the U.S. dollar, Euro-U.S. dollar chart. And what I'm going to punch up on the screen here is the 120-minute chart. I think we've been looking at the 120-minute chart, 210-minute chart, or 205-minute chart here for a while. Let that punch up on the screen. And, when you take a look at this 120-minute chart here, what I want you to take a look at is this leg that we've been in, this up move that we've had inside the euro, has really not broken down to the downside yet. The lows in the euro put in right around the noontime or so on January the 13th, Friday the 13th, luckiest day on the in the world, if you will. Hopefully you believe that. Hopefully you're not superstitious, but if you are, that's when it happened. January 13th. I know that was Friday the 13th. And in this case here, what the euro has done is the euro came back, did almost a move, did 84% retracement. Now it is moving back down lower. But still what you can see, the euro has shown some strength. So, it's giving King Dollar a fit. Actually, King Dollar doesn't really exist, folks, other than in our mind. King Dollar is nothing more than an index that's really a basket of currencies, which are the euro, euro, the pound, the yen, the Canadian dollar, the Swiss franc, and the Swedish krona, I believe, is the number 6. So it's just simply a basket of currencies, and the euro, which is the one that we want to pay the most attention to, is the largest piece of it. Let's go take a look at let's just expand out here. Take a look at the daily chart on the euro, just see what it is that we have going on here. If there's any retracements for us or where it is that we're at. And what you can see is we were showing this yesterday, how the euro had made just above a 1.272 expansion off of this swing point. And if we went back further, it was a 0.382 retracement, kind of what is referred to as a dead cat bounce, if you will. And in this case here, the euro starting to make its way on the way down. The euro really does want to trade at least down to this 129 area. If it does that, it's going to put pressure on the markets just simply because of the correlation that we know exists between King Dollar, the index, and our U.S. markets. But more likely, folks, it's just like when you would come to 601 Cleveland Street to visit us here at TFNN or Tiger Metal Exchange. You wouldn't stop at floor 382. You'd go all the way up to floor 618, or really it's floor 6, and you'd come to suite 618, and you'd spend some time with us. And if you ever are in the area, we would absolutely love to see you. So come by, shake our hands, and we would absolutely love that. Let's take a look at the other currencies that are out there. Let's see if there's anything going on inside the pound or so let's take a look at the pound here. We'll punch that up on the screen, and we take a look at the pound. We're going to see some beautiful sacred geometry numbers as the pound was coming into the high that was made today. So the high that was made today on the pound, what you did now, if you have made a 100% move of a couple of swing points that are out here, the first one being really three sets out here. You've got December the 8th, where the pound traded up to a high of 15769. You've got they traded up on the November the 30th, got up to 1.5779. When you come out here and you take a look at the high on December 21st, got up to 1.5773. And so far today, I think you've gotten up to 1.5795. What you also have, though, folks, what you've got here in the pound is you've got a 618 retracement off of this swing from October 31st, and you've got a 0.382 retracement off of this swing here going back to August the 19th, 2011. So it is coming into what you would expect to see some resistance. That doesn't mean that it can't blast through here, but it certainly is at a resistance level. If it can't handle this area and it decides to trade lower, and there's no other pattern here that I see other than just simply a straight retracement. You can see how the pound on a daily basis has done nothing more than just simply make a straight move up. And we take a look at where, if it decides to go ahead and retrace down from here, and again, the pound will also put some pressure. As the pound gets weaker, the U.S. dollar index will get stronger, and the normal spot for the pound to move down to would be the 0.382, 1.558, maybe 1.5448. 877-927-6648. Dow is off about 6, and the S&P is absolutely flat. You can go water skiing on the S&P right now. We'll be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. You got the Dow's trading up 5 points right now. S&P up 1, Composite up 3. You could have just water skied on the Russell. That was exactly flatlined, if you will. NDX up 5, all led by Apple. In fact, if you take a look at the top 10 right now, you got Apple's up $4.70. You've got Qualcomm up 40 cents. Google up $3.80. Otherwise, you've got Amazon down 86 cents. I think Amazon releases numbers after the bell. Intel down 14 cents. Cisco pretty much flatline. You could go water skiing on Cisco. Now, what I've got up on my screen here right now is I think I put up PAY. Is that what I've got up here? Give me a second here to find out. They are trading up. Let me see here. Trading up about 8.5% at 42. This is Pay, which is Verifone. So, we just take a look. Not really a lot of volume, if you will, here, but you do have a nice move. It's got 1.7 million shares, gapped up this morning. So let's go see where is Verifone trading into. It would be coming into the swing points here. And, if you just simply take a look at the bottom here, you're not seeing much in the way of volume that we've got here. Here is your swing point, which it comes to the November 16 time frame, has 1.8 million shares. The low on that swing point is 43.61. Has not gotten all the way up in there, but what you do have is you've got already 1.8 million shares. So it looks to me like it wants to trade in there. It would go and challenge the highs there of 45.56. If we back this chart out a bit and take a look at it, see if there's anything else. Not a bad looking chart here, if you will. Just simply has been in this sideways consolidated trading range here for quite some period of time. But you can see it is making, when you take a look at this, folks, it is making higher lows. and it is making higher highs. So you can, I don't have the channels, if you will, drawn in here, but it is something that you want to take a look at. Yeah, coming down, from this way, it was in a down channel, it was making lower highs and lower lows. Stopped right here, probably at about let's take a look at the retracement, just coming all the way back to the swing point from May of 2010, all the way up to the high that it had out here. And you got to love the way this works. It's that sweet 618 is where it stopped, or right in about that range. The 618 area, 3294, going all the way back to the lows from May of 2010. That May of 2010, area, it got tested back in, just all really during the month of May. We got a daily chart up here. So that is paychecks. Let's go, David. David White sent me a quick little instant message here. Said we should take a look at the stock LXK. What is that, David? LXK. He'll tell me, I'm sure, just in a moment. And David has David looked at a day trade on this Lexmark, which I think was IBM, and was sold to a Chinese company, if I'm not mistaken. And so Lexmark, they did come out with earnings today, and look at that thing. Is that really the right candle? Let me just refresh this just to make sure. I have had a little problem here with the data feed with so many things that are running in slow. Looks like you've got Lexmark trading down at 33.80, and the printer division, and a nice trade there, David. Very nice trade. And we take a look at the volume that is coming out of Lexmark here right now. It looks like struggling from a printer standpoint. You got 2.3 million shares, and no, Steve, you're thinking of Lenovo. Oh, thank you. Appreciate that. Folks, we've got something here called the Den, and the Tiger's Den, and it's really very cool. You talk about being able to do a show, or just being able to learn. From your standpoint, look, life is nothing but a show, and you're always doing a show, and there are great folks that are in there. If you want to know something, boom, all you have to do is ask. It is a database of information, but more important than that, it is a peer group of folks that are going to be able to help you take your trading so that you can find another gear, so that you can learn information. We got great resources. It's not just about what we do here on the radio show, but certainly all the resources there. You can try out the Tiger's Den for free. Just make a slight investment in yourself. 30 days time, you can try that out, and you really should. And when you take a look at Lexmark, now Lexmark did gap up. And so you've got this volume bar right here. It's trading inside right now. The gap up was on July 26th, did 8.9 million shares. And, you're just going to have to watch to see how this thing trades. If this thing rejects if the stock here closes up above 34.98 on light volume here, then we're just simply going to have this little trading range that it's got out here. That was for David White, who will be on tomorrow from 3 to 4. And folks, I've been using the software that he's created. It's absolutely excellent software. So we're looking forward to that getting out here in the marketplace for all of you tigers and tigresses. You got the Dow. It's up 750. Not 750 points. One of these days it might be up 750 or down 750, but right now only up $7.50. You got the S&P up $1.74. We'll be right back, folks.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in the equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stock placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. And we're taking a look at the, right now I've got up on my screen here is the energy sector of the S&P, the XLE. You've got the Dow's trading up 6.8. S&P's up $1.45. Composite up 4.24. Russell pretty much flat, up 0.36. King Dollar, all about King Dollar. It's up down 8 ticks right now. And the reason I have the energy sector up here is because we had ExxonMobil release earnings. ExxonMobil trading down right now $1.40. And even though they made billions, I mean, what, $9.5 billion or so, still the news or so. And I don't really follow the news. I just follow the charts because, to me, this is where the news really is. This is where you find out information. So what you'd want to do is you also want to take a look at Exxon and Chevron, CVX. Let me see where CVX is actually trading down, trading up 34 cents right now. You get the two of those things moving in the same direction, folks, and that's how you want to be able to understand how you would play either the XLE or, more importantly, the DIG or the DUG. And right now, what has been going on over the last several trading sessions, maybe 8, 9 trading sessions or more, is you've been dealing with this October 27th swing point. That is a swing point here where I've got 2 lines going across it on the top and the bottom. The volume that you've got out there is 31 million shares, and the high on that is 73.19. I believe that's the high of the swing point still during this kind of exchange from October all the way through today. You've not been able to take out that swing point. You had a chance You did that on the price-wise. You tried to do it on January 26th, but only had 16 million shares. You can see this red line here going across the bottom. So we can see that nothing more than really a large rectangular trading range, if you will. That is on the energy sector. Now today, if we take a look at trading, still, there's been no real conviction, if you will, in the marketplace. We have been trading now for just over an hour. If you take a look at the XLE, you're trading down, but you've had 3.4 million shares. So to me, that converts to about 18 to 20 million shares. Compared to the 30 million shares up here in the October 27 swing point. Well, what's that mean? Well, the energy sector is, you get the technology, financials, and the energy sector make up the majority of the S&P. And so the S&P is not going to go anywhere unless the energy sector is along. Well, you got the other sector, those other two sectors, right? You got the financials. So all you have to do is go take a look at the XLF. So if you're someone that plays the SPYs, or you play the SSO or the SDS or any one of those ETFs, what you really want to also be able to do, folks, is you want to pay attention to what's going on inside the energy sector. You want to be able to pay attention to what's going on inside the financial sector. So let's go take a look at the financial sector out there. That would be the XLF. And the XLF, well, what is the XLF doing? The XLF is struggling against the October 27 swing point as well. October 27th, high on that. You can see the two lines I've got going across my screen there. Those two lines, the high is 14.17. The low is 13.68. You're trading out right now at 14.01. Of course, I had a data feed problem yesterday. I'm hoping I'm not having that same data feed right now, but I know someone in the den will tell me for sure. So it looks like you got the XLF trading out at 14.01. 14. This thing is, I'm getting a good live feed here. And so it is providing us with no information. Now, you had 232 million shares on that candle at October 27th. That is a swing point, really, that is going to be able to release some information to us. And right now, today, what you've got is you've got 18 million shares. 18 million shares, that is, we're taking a look at about 100 million shares today is what it might do. And what it did yesterday is 58 million shares. The day before it did 84. Now, that was just quick math in my head. So, and we know that more volume comes in the marketplace in the beginning of the day, so you can't just straight line it like I'm able to do in my head, if you will. But at this stage, that 14.17 needs to be taken out in order for the S&P to absolutely move higher. Now, in the financials, if it were able to take that out, whether it takes it out on lighter volume or heavier volume, it's got another little resistance area. It's at 1481, which is a 1.272 expansion of this swing point. 1481 or in that general area. So you can write that number down on a piece of paper, but you don't have to be, it's not going to hit it exact, okay? So that is the range. What you also have at 1481 is a 618 retracement. And folks, if this were to get up over there and finish that pattern, what you would have is you would have a Tiger Gartley sell pattern, which are things that we always look for. You look for butterfly sell patterns, Tiger Gartley whether it's buy or sell, because you want to be able to see these occurring on lighter volume. It means that in this case here, you'd be going over the B point, completing the pattern on lighter volume, and that just simply puts a probability in your trading system. And you should have a trading system, folks, and you should be able to keep track and understand what the expectancy of your trading system is all about. That's what I do. To me, it's really all about mastering probability. It's all about becoming a master of whatever it is that you want to do in your life. And the only way to become a master, folks, is you've got to be willing to play full out, and you've got to be willing to make investments in yourself, whether it's just simply buying the Art of Timing the Trade or, other newsletters or services, whatever it is, you've got to be willing to make investments in yourself. So let's go make an investment here in Mike in Lakeland. Mike, how you doing?
Hi. Good morning, Steve.
Good morning to you.
Thanks for everything you do. You work really hard in a good education.
Thanks.
I was going to ask you your thoughts on silver, but if I can, I do have a question. And I think you're very, very good, and you work very, very hard on the technicals. And and you're challenging me to have to learn a lot more. But I want to get your thoughts on. We know that these central banks intervene so much.
Yeah.
And I know a lot of the technicals are supposed to reflect fear and greed. But how do you reconcile in your mind, the intervention of the banks and what they do and distort, things? I remember, when the first QE1 went around, I said, well, they can't do it forever, but boy, they did it for a good long time. And and I'm like, are we doing this again? I mean, there was actually, and I don't even occasionally kick him on. There was a guy talking with Santelli. If I can just share with the other folks, probably heard it.
Go right ahead.
And he just said, he was talking to Santelli, and he said, the numbers came out, and he just finally goes, well, we got the Fed easing, and I'm telling my people, get in the market. And Santelli said, well, what are you talking about? This is ridiculous. We didn't have any growth. And he goes, I don't care about if we got growth or real growth. When the Fed's easing, the market goes up, and I'm telling my people to get in the market.
Well, how I reconcile it is so far we haven't seen that liquidity in the market. If you take a look at QE2, for example, which really came into which was first released or mentioned in the market right around the August 25th, 26th time frame in 2010. You go back to that time frame and the market did nothing but simply go up. So there is no question that it was nothing more than a revaluation of assets because you put more money into the game. It's just like if you played Monopoly and you had two Monopoly sets and you put more money, you took the money out of one Monopoly set, put it in the other. Monopoly itself, when you play that game, you can play that thing. It seems like that takes for like 10 hours to finish a game, right? Well, you go ahead and double up on the bank, and just you can play that thing forever, if you will.
Yeah.
With all the money. And that's the market too. That's how I view the market. If there is a QE3, and it won't be transparent because right now, I don't see a QE3. I don't think a QE3 specifically has been announced like a QE2. But if it is announced, here's how I'll play it, Mike. I will simply take out my dartboard. You can start throwing your dart at almost any stock that you want. And, in my opinion, it'll go up. Now, I would use something maybe a little bit more strategic, but it's almost that simple.
Do you think Europe has launched, in that sense, QE3, though?
No, not yet. What we have to be, in order for... So let's just say that they did, okay? If they announced QE3, then that would mean that the U.S. dollar would get stronger, right? Because they would be flooding the market with euros, correct?
Correct.
Okay.
Correct.
So what we do know, just simply because of the directional correlation between the U.S. dollar index and our markets, and they go through a conniption. If the U.S. dollar is stronger, right now you got King Dollar's actually up. It's up a penny. So it's gone from negative, this morning to up, and our markets are down a bit. So if they really did do quantitative easing over there, which they could, they haven't, they could, then you want to be on the short side of the U.S. market, in my opinion. That's how I reconcile it. I say, what they're really trying to do is they're really trying to not do QE3, and they're trying to sell these bonds, and they're trying to be able to do it, so that the bonds are denominated in euros. When you do that, that would then, if people are taking money, in euros and buying bonds, what that will do is that would create a weaker dollar. But how I play it, Mike, is really just take a look at the patterns. It's nothing more than I absolutely pay attention to what's going on with the patterns inside the euro, pound, and yen. And Canadian dollar, take a look at. But it is taking a look at those patterns, seeing what's out there, and then lining that up with whatever else it is that I'm trading. And then what I know, it's a game. It's like the Monopoly game. It's nothing more than a money management game. It's nothing more than risking 1%. And so when you're wrong, because it's trading. Just like any business, it's a distribution of wins and losses. You've been in other businesses before, and you've got investments where you spend money trying to maybe get a client, and you don't get that client. That's a distribution of wins and losses. You're always making investments, and sometimes they pan out and sometimes they don't. If you were to try to go get one client and you put all your eggs in that one basket and it doesn't work, you went for broke, you end up broke. Same thing in the marketplace. You go ahead and put all your eggs in one basket and you say you're going for broke. What I know is what you think about, you bring about, and what you focus on grows, right? That's what Tom tells us. Well, you focus on going all in on any one thing, folks, and if you're going for broke, you'll end up broke.
Right. No, I understand. Yeah. I did want to get your thoughts on silver. I don't want to chew up all your time. I can jump off the phone.
Yeah. We're good for a moment here. Right. And so silver right now, what I see silver doing is getting into an area of resistance once it gets up into the 35-ish area. And in fact, I'm looking to maybe short silver when silver gets up into the 35-ish area. What you've got up there is you've got a couple of negative-looking candle patterns. We've kind of been in this range here. It's had a nice move. it absolutely has had a nice.
It now.
What's that?
I was thinking that it was rejecting this 3401 area almost as we speak.
Yeah, could be. You're looking at, I still, on the metal side, because of the moves that they can have, the better trade on silver, instead of really trying to short it, is to buy silver on a pullback. I mean, that would be the better side of the trade, in my opinion. Same thing on gold. Gold's at a stage where you actually could short it, but I think the better trade on gold, especially because of the uncertainty that's out there. So, when I'm trading, I'm just not only focused only on technicals. You have to be aware of some of the other, fundamental things that are out there. And, I would rather be, buying gold as it was testing its lows on lighter volume, because any crazy thing that could go on in the United States is going to make gold or silver go up. Uncertainty, as they just said.
I was with you with the bullish dollar, so I was just thinking that the metals would be maybe not gold, but I was thinking maybe silver would be primed for a pullback with a stronger dollar.
Yeah, the divergence out there, and I'll put this chart up here on the screen. This is the chart that gives me the most angst, if you will, from a technical trading standpoint, and that is the U.S. dollar index, and it's the U.S. dollar index not on a daily basis, as soon as my screen shows up here, but it is the monthly chart on the U.S. dollar index that gives me the most angst, if you will, only because right now I need to see it break outside of the channel, and I'm going to put the monthly chart up here on the screen, and so it's much longer term standpoint, so it doesn't necessarily impact, the way that I might trade, intraday or daily, for the next. But right now, what you can see, folks, you can see this real long-term channel that the dollar index has been inside, and right now, last month, the month of December, now this month, the month of January, it keeps trying to bump up into this. This area has to be broken. In order for the market to really go down, this area has got to break outside of this channel, and it still is staying inside this longer-term channel. And so, what this says to me is that if you can't bust it up, it'll bust it down, and that then would go ahead and move the U.S. dollar down. And I know that just simply because of the directional correlation, that our markets would move higher. So, that's where I take a look at that longer-term picture. This chart here is like etched in my memory. All right?
All right.
Does that help you out?
I appreciate you, Ken. I appreciate all the work. I really do. I wasn't...
It's cool. No, we appreciate you calling in, listening, calling in, being a co-host. Are you kidding? You call in anytime you want, all right?
Thanks, Steve.
We love it. Okay, have a great day. Let's go to Mark in Colorado. Mark, thanks for calling. Thanks for holding.
How are you doing today?
I'm doing great. Yourself?
Doing fantastic, thanks.
Oh, good. Glad to hear it. And how are things out in Colorado? You guys got enough snow out there so that the ski resorts are doing well?
It's pretty weak.
Really?
Yeah.
So where does this rank, if you will? Is this one of the worst winters that they've had out there, or?
It's been we haven't had a lot of real good snow. We had a little bit last week, and it's pretty.
Wow.
I'm on the Front Range here, not too far from about an hour north of Denver, and it's going to be about 55 and sunny today. So it's almost more like spring.
Wow. Well, you can get a good suntan if you go skiing.
There you go.
I've seen people come back with some of the best suntans, when they've been out there doing the late spring skiing. Better suntans than if you're sitting out here on Clearwater Beach.
Yeah.
Mark, you wanted to look at the SSO?
Yeah, I got into some SSO puts.
Okay. Do me a favor, just stay tuned as we stay on the line as we go to break. We'll come back. We'll take a look at SSO for Mark, or anything else that you'd like, folks. Just give us a call, 877-927-6648. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Welcome back, folks. 877-927-6648. And let's go back to Mark in Colorado. We're taking a look at the SSO. And, Mark, how can I help you out?
Yeah, I went in, got some end of February 51 puts today.
Okay.
And I'm up a little bit. I bought them for about $1.45, and they're up about 30 cents. So
oh, good for you.
Nice 20%-ish quick move here, but I'm kind of looking to hold it for about a week. Wondering what your thoughts are on the SSO, which I'm playing it short.
Yeah. Well, so the SSO. You know what I do? What I do like about the chart patterns when you take a look at the SSO, folks. Number one, and you've seen this as we took a look at the SPYs or what have you, is you've got a 1.272 expansion off of the October 27th swing point to the high that was put out there on January 26th. Now, when you take a look at chart patterns, now patterns repeat, whether it's in life and what the markets are. When we take a look at what go on in the markets here, they repeat over and over again. What you're going to see is 618 retracement off the October 4th low that was put out there, that when we came back after Thanksgiving into November 25th, he had a 618 retracement. Market moves up on SSO, pulls back. Where does it pull back to? The 0.618. So what this says, unfortunately this doesn't give you the timing of it, okay, is that it looks like if the market does move down, the SSO is going to be moving down to 4620 range. That is the 0.618, of the move. And what you got to do with those options is take some bread off the table, and along the way is how I would take a look at it, especially as time goes on. But it looks to me like when and if the market does want to pull back, that the SSO would be pulling into the 4620 area. Alrighty? Up, you there? Oh, we dropped, somehow, winter must have hit all of a sudden overnight, and we lost Mark, so I can't ask him another question. But, Mark, that is how I'd be trading it. That's how I'd be playing it, and you want to be able to cash in some of those stinky fish when you get them. That is the best way. But you can always call back. Mark, today you can call back in at 12 to 1 on the options hour. You might have Victor Jones might be on there, but, great guys that can also work with you on your option strategy. And you want to stay tuned because following this show, you've got Kate Stalter, then Ken Shreve from 3 to 4. I'll be back with you from 4 to 6 today. And let's see, if we go take a look at, let's see, what do we want to look at here? You got King Dollar is trading up. It's up 8 ticks right now. Dow is down 44. Let's go back over to the, if I can quickly get over there, to the shorter-term ETF charts, the 5-minute charts. We've got about a minute before we are off the air. Let's just see if there's any kind of volume, because what has been the problem here, folks, either on the way up or on the way down, has been any kind of conviction in the move. That's why, Mark, I especially say, when you get in the money on your trade on the options inside the this market right now without any conviction in any one direction or the other, and you just take a look at yesterday's activity. You can't discount yesterday's activity, how the market traded down and the market was able to push itself up. And we've been doing that for the most part for a long time, it seems like, certainly for days, and we haven't had any conviction. You can see here, even on the move down. So we're looking at a 5-minute chart, and all that you're doing is just simply making, an ABC down. You're coming back and you're testing, swing points. In this case here, I'm looking at the IWM, I believe. It is testing the swing point from 345 yesterday, and it is doing that on that had 594,000 shares. You're coming in with 200,000 shares? 366,000 shares. Still just not enough volume to push things down. Let me go over to the ES Mini. Let's go take a look at that. Folks, because what you want to really pay attention to is the apogee. Okay, here's where we are. Let me give you a quick little, in 10 seconds. You want to pay attention to 1:48 p.m. in the ES Mini. If you start trading below that area, you want to be short the market. If you're above it, you want to be long. That was the last apogee. That came in yesterday, January 30th, 1:48. Folks, have a great morning. I will see you this afternoon, 4 to 6, or tomorrow morning, 9 o'clock.